Hello and welcome to today's webinar, which is designed to give you an introduction to the MyNetwealth service, which allows you to track all of your wealth and investments, plan for the future, and learn about the key topics of investing and financial planning. My name is Matt Conradi, and I'm Head of Client Advisory here at Netwealth. We're going to have time to run through all of the key features of the MyNetwealth service, and I'll also try to answer some of your questions towards the end of the session. Just one technical point: if you have any issues with the webinar today, please do start by refreshing your page. That should resolve any issues you're having with audio or visuals. But now let's just get started. So what I'm going to do is share my screen and show you the homepage of MyNetwealth. So when you log in, you'll see a dashboard here that has all of the key features and some important information for you to be thinking about and looking at as well. We've got the wealth tracking, which we'll dive into, where you can look at all of your different investments, get tracks, breakdown of the assets that you have over time, see an understanding of the asset allocation and so on. We've got the planning, which is where you can think about the future, what your investments will help you achieve, and whether you can make use of those to achieve your different goals in the future. Then we're going to have some highlights here, which come from our Learn section, and I'll dive into that in a bit more detail. And as we go down the page, there's the different parts of the Learn section, which is webinars, articles, and guides here at the bottom. And then we've got some market information as well. You can also find out more about Netwealth and the other services that we have in the Learn section as well. So when I think about why we have those different parts, it's really to help you understand. If you're going to understand your picture today and plan for the future, the first thing you might want to do is get a little bit of education around that. And the Learn section is designed to help you think about some of the key topics in financial planning and investments. We've broken that down into 3 different types of media. So we have the articles, webinars, and guides, and that's really because different topics will be better presented in different ways, but also because we know that as individuals we all like to digest information in different ways as well. So if we dive into articles, what we'll see here is that it's broken down by topics, and also on the right hand side you can select different individual articles. So perhaps I want to read about building your smart financial plan in 7 steps. We can dive into this article, which has been written by one of our senior client advisors, Tom Kimchi. And it gives you 7 simple steps to thinking about financial planning. Similarly, if you wanted a more in-depth view, you might go to guides, where you can learn about retirement planning. And in here we have interactive guides that are designed to give you a little bit more detail, a little bit more content to digest and to look through, to help you understand different things that you might want to do. So for example, setting goals, thinking about annuities or drawdown, for example, when you're coming to retirement, understanding things like time horizon, and you can dive into these different areas, look at the charts, which are all interactive as well. And that's all embedded and available for you in the Learn section. The final one is webinars. So you'll find recordings of webinars that we do. You'll find some other content and information that you have. For example, we've got a year ahead one here, or a recent one that we did, which was combating inflation. And you can just click on those and the video starts straight away for you to look at in your leisure as well. This section is continually updated with information for you, and you'll be able to come back here and either dive into something that's specific in the recent environment, or a learning section that's something that will help you with a particular topic as well. Now let's go back to the home section and look at 2 of the other main areas that we mentioned, which is wealth tracking and wealth planning. And I'm going to start with wealth tracking, because the idea here is that before you can really think about what's going to happen in the future, you need to understand where you are today. And the wealth tracker is designed to help you get a sense for your overall position and then track the value of that going forwards. And we have here someone's wealth tracking dashboard, an example where they have a total wealth tracked of 493,000. We get the change in value over time because we are tracking the values forward. So when the assets are entered, we're going to then look at their prices and update that on time after time. We also give a breakdown, and it's really designed here to give you a sense for how you're positioned. We find that a lot of individuals and investors don't have a good sense for actually how all their different parts, maybe their pensions they've got from different providers, their ISAs, their cash accounts, all fit together and give them a total overall asset allocation. And it's really asset allocation that drives the risk of your portfolios. And as we look into the planning in the future, it's how it impacts whether you're going to achieve your goals or not. So let's look here. What do we have? Well, we've got that breakdown at the overall level by asset class. So equities, fixed income, cash, other things like alternatives and property. We have a breakdown by account types, and this is important as well. So how much have I got in pensions or ISAs? Do I have general investment accounts, so taxable portfolios? Maybe there's some junior ISAs and some bare trusts for my children as well. Then we can see how the tracker keeps track of the total wealth over time and shows how that evolves through ups and downs in market cycles as well. So you can keep a sense for where you are going forwards. It's broken down by the different account types as well. So we can see here someone doesn't currently have any Netwealth portfolios, but if they did, they would pull through. They've got a portfolio here at Brew and Dolphin, which is their old pensions. They've got an AJ Bell You Invest ISA as well. And then from Aviva, they've got another pension scheme as well. And if I dive into these, we can see the detail of how the tracker works. So we can see the individual holdings that they are tracking. So in this case, they've got one balanced fund. And I don't know about you, but when I see something like the Aviva Schroeder Managed Balance S6 pension fund, I don't really know how it's going to be allocated. And I think that's one of the key benefits of this, is it gives you the underlying breakdown of that fund. We look through the asset allocation, pull in that data, and give you that picture. And then if you were to add another asset, which you can do by selecting the type of holding, you can pick common stock, fund, ETF, investment trust, or cash. Let's say that we pick an ETF and we're looking for the iShares FTSE 100. So if I go like this and start typing that in, it'll filter through the different positions, and then I can check which one it is. Actually, I've got the sterling priced fund here, the distributing share class, and I've got 540 units of that. I add that holding in. That gets added into my overall picture. I get a little notification of that. We see it added in down here, and it's updated my overall asset allocation as well. And then that will be tracked forward in the performance over time. So the performance of this account will be tracked forward with that additional holding. Because in the wealth tracking, we have the overall picture, that will be back updated as well. In the track an account, if you want to give a new account, you select here, and we show two different types. At the moment, we have the custom account tracking available. This is where you can say where the account is, add the individual holdings as I just showed you one by one, and then we'll classify them and track them going forwards. Something we're going to be launching later in the year is linked to external accounts, which is where you would share your credentials for them, and then we would track the value of them over time for you automatically. So at the moment, you can enter the positions and we'll track the value of them going forwards. And give you the asset allocation, and going forwards we'll be able to pull through live links of those to external accounts. So that's the wealth tracking, and that gives you a sense for your picture today. Then we need to think about what do we do with this information? What does it mean for me? What's the impact on my real life and goals? It's great to know how much money I've got and where it's allocated, but I want to think forward a little bit. So I'm going to show you now the wealth planner. Now, this is an example where I've pre-filled lots of information. If you do it the first time, there's a wizard that helps you get some of the detail. And then what we do is present a summary, a wealth plan going forwards. And it starts with the value of assets on day one. For this person, they're 47. And then it shows a projection forward of a range of different outcomes. So the chart there, the blue sections are stronger or weaker outcomes of the person's wealth over time. The little marker points here are when something happens in a big event. So in this example, they're having a one-off withdrawal from their wealth, which is named here as Mortgage 10 Bell Road, and it's for an amount of £124,500. And that's going to be paid out in 2032. And that causes that shift down in the overall wealth, because even in stronger paths or weaker paths, 124,000 comes out. Go forward to another marker point, we have when they retire, and they're going to start drawing a regular income at this point. We can see over here, their target monthly income is £5,500. Now, this is a net of tax monthly income, and it's going to be increased each year by inflation. It's increased. Our current long-term assumption for inflation is the same as is baked into the return assumption. It's 2.7% per annum. So although inflation's higher right now, when you're doing a model for 20, 30, 40 years, it's important that you don't extrapolate out that we're going to have 10% inflation forever. We've put a long-term rate there of 2.7%. And so when we think about the net of tax income target, so this is once I've taken money out of different wrappers, pensions and so on, what do I get in my pocket? We're looking for £5,500 a month. We're going to inflate that by 2.7% going forwards. Then, so if we look at the rest of this projection, really the different parts here are the different outcomes. The white line in the center of that dark blue section is the average outcome. And that's the one that we're going to focus on. But there is this range of uncertainty depending on how much risk you take. And over time, we're going to have weaker scenarios and stronger scenarios. And underlying this is thousands of different paths of return. So we don't just take an average return for weak and then a return for the average outcome and a return for the strong outcome and just extrapolate that forwards. Because in reality, returns don't come like that. We have up years and down years. And if you're drawing money out of it, there's a path dependence and it matters. So if you have a bad year and you draw some money out and you pay that mortgage off, it's going to have an impact on your future wealth as well. And that's why we use thousands of underlying paths to help us model that going forwards. So what else have we got on this summary page? Well, we've got a sense for whether you're on track or not. And at the moment, we're saying here, actually, we think that they might be off track. And it looks like your retirement funds will not last as long as you might need them to. And if we go back to the chart, we can hover here and it says, look, actually, the projection says that the funds are going to be depleted when they're age 80. And for us, we try and focus on making sure that you have enough money until age 95. That we think deals with some of the biggest risks that you have to face, which is longevity. So if we can make sure there's enough money there until you're age 95, then we think that you're likely to achieve your retirement income goals and the other cash flows that you're going to enter. To help people that deal better with writing than the numbers there or the charts, we also have a description of the retirement plan or the information that's there in that projection. It talks through what's happened, what's being withdrawn, how much money's been allocated to it as well. And you also have the ability to speak with an advisor. So if you want to talk this plan through, get some more information, maybe take some guidance, or in fact, if you want formal advice as well, you can book in a call. There's no cost to this. It's an initial consultation and information, and our advisors will be very happy to speak with you. You can just select a convenient time and it will automatically send you a link into your calendar and a link for a video call going forward with one of our qualified advisors. There's some helpful things to look at here in the scenario section about whether you might want to make changes to the plan over the future as well. And there's more information here in a guide to help you think about when you are financial planning, the key elements to consider. So you can dive into this in more detail if you'd like to, whether that be about whether it's setting your goals in the first place, modeling for the things that you can't control, controlling what you can for a better financial outcome, thinking about risk levels as well. That's all there and available in that guide. So this is the snapshot, but if I'm looking at this, I might want to actually adjust it because I'm not looking like I'm on track. And you can do that in a couple of different ways. You can click refine your plan. You can dive into the individual accounts. We've got a summary of the pension ISA or the general investment account there. I'm going to click refine your plan. And what does that start with? Well, it starts with about you and your goals. So what are we actually looking to achieve here? We're saying we haven't retired, but we want to retire at age 60. And from 60, we want a monthly income of £5,500 a month. So if we're trying to make it more likely that we can achieve that goal, we might need to adjust some of these goals slightly. What we're seeing there is that maybe we might have to plan to retire a little bit later. So maybe I'm going to put that in to age 62. We could target a slightly lower level of income, but I'd like to see what the impact of that extra 2 years of working and potentially saving will have into the future. So I'm going to click confirm changes, and I'm going to go back to the projection. Now, you see at the top here, it says the inputs to your plan have changed, rerun your projection to see the impact. So it will go back to the summary screen without having rerun anything. But if you click rerun projection, the little green button here, what it's going to do is give you, it's going to rerun all of those parameters and look at what's changed. Well, what we changed was the level, the retirement point. So we moved that out 2 years. So instead of being 60, we've gone to 62, and it gives an update of the plan. So we see what's happening. Now, what we can see visually, hopefully, we're already, it's got better, but it's not, we're still not necessarily going to achieve our goal. If I hover over the depletion point, it's now age 86. So that's made a big difference. We've got 2 extra years of working. And instead of running out when I'm 80, it's going to run out when I'm 86. But we're still not necessarily achieving our goal. We can see that from this orange box here, we're off track. So let's go back into refinement and think about if there's other things we might change. We could change the income target, but I'm going to try not to do that. We could get rid of this paying off the mortgage, being in one lump sum, but I'm going to try not to do that as well. I'm going to dive into the individual accounts, the actual investments that are being pulled through. And what we'll see here is firstly, there's a level of risk to select, and thinking about that's important. So we've got the cash level as the lowest point, risk level 1 up to 9. Now, from an investment perspective, there's a wide range of different types of risk you could be taking within your investments. So right now, we've selected here for the pensions risk level 5, and we've described that as between 55% and 70% in equities or risk assets. If I went up to 9, we're talking about 100% allocation to a concentrated portfolio of single company equities. Or if I went down to 2, we're talking about 20% in equities. So quite a conservative portfolio because the rest is in bonds, money markets, or cash savings. I'm going to go back to 5. If you want to get more information about what risk means, how we think about risk at Netwealth when we're modeling, there's another guide here that you can dive into. It's got descriptions of the Netwealth risk spectrum, how we think about the impact of that over time, how it changes our projections. So you can really dive into as much or as little detail as you want on that. The impacts of things like asset allocation, how that impacts risk, what the historic characteristics of them have been. When I look down at the individual accounts, though, that make up the pensions, I can see that we've got 2 that have been tracked from the wealth tracking side of things. So if you put information in the wealth tracker, it's going to pull it into the planner. We can see here that we've got that Brew and Dolphin old pensions. We've got the Aviva pension as well that's in there. And we've got factors of the level of risk and whether any contributions are happening. So we can see in the Aviva one, if I click edit, we're making monthly contributions, and that's made up of £1,000 of personal contributions and £1,000 of employer contributions. So we're going to deal with those correctly in terms of taxation, of how you get tax relief into the pension scheme as well, and that's going to be correctly modelled going forwards. You can put an assumed end date for those contributions, but otherwise, if you don't, we're going to assume it's at the point that you retire. And if you crystallize any of your pensions, you can also show that here. So if you're in a scenario where you've crystallized some of your pension and not others, you can put that information into this section. We also have a section for defined benefit pensions. So if you're in a lucky position to be having a final salary pension, if you've got any defined benefit pensions beyond state pensions, you can enter them here. You can say when they're going to start, the level of lump sum, and what the inflation rate would be. In this case, we put in one of £4,235 starting in May 2037. We also have a section for state pensions. Now, it will default to £185 a week, which is the current state pension level. You can click on this link here if you want to find out what your state pension estimate is going to be, so you can put that in correctly. This person's put it in a slightly lower level. Perhaps they missed some of the contributing years required to get the full state pension. We've also got a section on protected tax-free cash and the lifetime allowance. So you may have seen in the recent budget that there was a change to the lifetime allowance taxation. Essentially, there's not going to be tax if you exceed the lifetime allowance, but it still drives the level of tax-free cash that you get. This feature's been updated. You can say if you've got protection. If you do, you can say at what level that was, and that will drive the level of tax-free cash that's going to be applied inside the projection. Because within that projection that we're doing, we are correctly accounting for taxation within taxable portfolios or general investment accounts, moving money into ISAs, any taxes that we paid on drawing money out of pensions, and the sequencing of that through time. So I'm not going to make any changes on this one, but I'm going to have a quick look at the investment side of things. And I'm going to look here. I've got my ISA, okay, and I'm making regular contributions. That's great. That's allocated at risk level 4. I've got here general investment accounts, and there's 150,000 being marked here because you can add extra parts in that aren't tracked. So neither of these will put into the tracker, but you can add them in if you want to. And what we've done is added an account here, and it's 125,000, but it's set at risk level cash. Well, what about if I say, well, actually, you know what? I'm going to try and invest that money and see if that has an impact on my goal. I'm going to put it at risk level 4, and that's the change I'm going to make. I'm going to click confirm. Still contributing to it. I'm going to go back to the projection. Remember, this is showing in the picture before those changes are put in. So we've got that little notification up here. I'm going to click rerun projection, and then that's going to recalculate based on those changes. And the 2 main ones I made was around the potential amount of tax-free cash we could have, and also moving that 125,000 that was allocated to cash into investments. And then we see another update. What does that mean? What's that done to my projection? Is that looking like it's made enough of a difference through time for me to be on track? And yeah, it's got slightly better again, got 87 versus 86, but it's not made as big a difference. And that's quite interesting, isn't it? This is the kind of insight you can get by iterating around. Deferring retirement by 2 years had more of an impact than investing that cash. But we can start to see those different parts. So what else can I do? If I go back down to the scenarios down here, we can think about what might be the right thing to do. Reduce your target income and withdrawals. So I'm going to click edit my plan. and I'm going to have to accept that maybe I will need a little bit less income in retirement, or maybe I'll be able to have a little bit less income in retirement. And I'm going to put that down to 5,000. Click confirm changes, go back to my projection, and I'm going to rerun that projection. So I can see the impact of reducing my target income from £5,500 net, inflating going forwards. Remember, it inflates, and put that down to £5,500 to £5,000 net going forwards. And that's had a pretty big impact. We've suddenly seen that now we've shifted along a bit further in the outcome. So we've got more paths that are going to be able to last to age 95. And if I hover over the last part, I see it goes to age 92. But I'm still going to have to make a further change in order to get the outcome that I want here. And maybe what I'm going to have to do is think about taking a little bit more risk in another part of my investments as well. So I'm going to go back to refining my pension, and I'm going to consider going up to risk level 6. And I can click confirm change on that one, and then I'm going to go back to my projection and rerun it one more time. So I've taken quite a big chunk of my overall investments, and I've increased the risk just up one risk category. But because I'm doing it over a long period of time, I'm going to expect that to have a fairly big change to the overall outcome. It's going to do two things though. In this projection, it's going to increase the level of average return, and now we're pretty much looking like the money's going to last until age 95. And in fact, once these markers pop up, I can see, hover over there, and it's saying the money is going to last, but on average, we're going to have 475,000 remaining when we're out towards age 95. But what we've also got is a much wider range of outcomes, because as you take more risk, we get less certainty of those outcomes. Whereas if I had a really low level of risk, if you think about cash, I know what I'm going to get every period, but it's going to be less return. So I might now be happy with this goal and this plan. There's a long way out going forwards, but I could also want to then discuss it with someone, because how would I actually go about implementing this plan? What changes do I need to make? You might want to speak with one of the team to talk about that. You can actually look at maybe implementing some of that with Netwealth, and I wanted to show you some of the additional information you can find if you are interested in either taking advice or investing with Netwealth. If you come down to this section here, you can learn more about Netwealth. There's a little bit of an overview of the company and what we do. There's some information on some of the other elements that we have. So we are an investment manager as well, and we can learn a bit about the investment approach, how we think about investing, if that's something that's right for you. We also offer regulated financial advice, give guidance, so you can book those calls to speak to someone and get information as well to sit alongside this, or you can pay for advice if you want a retirement plan run, or you want to think about how to approach drawdown. You can find some more information on our portfolios as well, so how we invest. We have 7 profiles of risk. So on that spectrum before, you saw cash to 9. That's to reflect that there is riskier things than what we do, but our portfolios that are managed and available and accessible are across 7 risk levels, from risk level 1 to risk level 7. You can see the breakdown of them there. We can see that we have sterling, SRI, that's socially responsible investing portfolios, or ESG portfolios, it sometimes refers to. We've got dollar-denominated portfolios and euro-denominated portfolios. And then you can find more information on things like performance, historic investment performance, so you can compare that to what you've currently got, information on our fees and charges, what the impact might be of not paying too much in fees. It's something that we believe quite passionately in, that you shouldn't overpay for your investments over time, because it has a huge impact. And then you can look through any of this and get in touch as well if you want to. If you have any questions directly, either feel free to log in and book a call, or email us at advice@netwealth.com. So those are the key areas we wanted to look through across the MyNetwealth dashboard. So you have access to all those learning resources and information. You can track your wealth and get a sense for how that evolves through time and the asset allocation. And then you can think about the planning as well going forward. So what does this mean? What are the choices I can make? And remember, you can always talk to someone if you want to about that. We're going to have time for a few questions now. So I'm just looking at the key ones that came through, and what to think about. One of the ones we've had is about in the wealth tracker. What assets can we not track in this, and what assets can we track? So we can track investment funds, we can track ETFs, we can track cash holdings as well. And there's a really wide range of different funds and ETFs and equities that you can track at the moment in there. One thing that you can't track currently is individual bonds, single bonds. if that's something that we see more demand for, we would be happy to think about adding that in the future as well, but at the moment that's not there. Similarly, property, we have listed property and investments, but we don't track other properties. We're constantly looking to improve this and update it. So if there's things that you would like to track, we'd love to hear your feedback and understand what it is you'd like to do. You can email support@netwealth.com if there are things that you'd like to ask us about or understand more of as well going forward. So lots of things you can track, and there'll be more things we'll be adding through time as well. What other questions have we got? Let me just have a quick look here. So we've also got a question about planning. So when I think about the planner, one of the questions that we have is about inflation, just double checking on how the inflationary parts work. Well, actually what we do when we think about inflation, I mentioned before that we inflate the withdrawals, the target level of the withdrawals over time. We also inflate a little bit more than just up by the 2.7% for the period up until retirement. We assume that you're inflating withdrawals a little bit more than that because you're working, you're hopefully earning above inflation pay increases, and then it comes down over time. And inflation is factored into all of those projections. It's a really important part. So we think these projections are really a really good sense. They're really comprehensive. They think about tax, they think about ranges of different outcomes, mention those thousands of different paths, and inflation is definitely a part of it. We also think they're relatively conservative. So we don't want to just show you really strong returns that makes everything look like it's going to be okay. You need to understand the trade-offs and the decisions that you need to make through time. And by being a little bit more conservative, it gives you a chance to be able to make a change and impact on it. If we showed you those really strong outcomes in every scenario, and then later on you realize you've been on a weaker path, it's too late to make any changes to that as well. I think that's all we've got time for on the question front today, but if you do have any more, and if there's any that have been submitted that I haven't got to, we will come back to you directly for them. And if you would like to ask further questions, as I say, please do book in calls. You can click on the section here, needing some help or speaking with an advisor, or you can email advice@netwealth.com. Thank you very much for joining today's session, and we look forward to working with you in the future. Thank you.